As a retiree in Canada, understanding how your pension income is taxed can seem daunting. However, having a clear picture of the taxes levied on your retirement income is crucial in helping you plan for a comfortable and worry-free retirement. In this helpful guide, I will walk you through the essentials of how Canadian pension income is taxed, including the various pension sources, deductions, and credits that can be applied to your tax return. In order to understand the taxation of Canadian pension income, it is essential to identify the different sources of retirement income. In Canada, there are three main types of pension income: the Canada Pension Plan, CPP, and Quebec Pension Plan, QPP, Old Age Security, OS, Pension Registered Retirement Income Funds, RRIFs, and other registered pension plans, RPPs. All these income sources serve as the foundation of Canada's retirement income system, and they are subject to tax at varying rates, depending on your overall income and other factors. The CPP and QPP are considered taxable income and are reported on your federal tax return. The tax rate applied to your CPP or QPP benefits is determined by your total income and the provincial or territorial tax rates applicable in your region. If you have additional sources of income, such as employment or investments, your combined income may result in a higher tax rate applied to your CPP or QPP benefits. Tip: to avoid a large tax bill at the end of the year, you can request to have taxes withheld at source by completing Form ISP 3520, Request for Income Tax Deductions, and submitting it to Service Canada, CPP, or Retraite Quebec, QPP. Old Age Security, OS, pension income is also considered taxable income and is reported on your federal tax return. The tax rate applied to your OS pension benefits is determined by your total income and the provincial or territorial tax rates. If your income is above a certain threshold, you may be subject to the OS recovery tax or clawback. The clawback is a tax levied on high-income seniors, which results in a partial or complete repayment of OS benefits to the government. Tip: to minimize the impact of the clawback, consider income splitting with a spouse or partner, contributing to a tax-free savings account, TFSA, or deferring your OS pension for up to 5 years. Income from registered retirement income funds, RRIFs, and other registered pension plans, RPPs, is considered taxable income and must be reported on your federal income tax return. However, you may be eligible for the pension income tax credit, which can reduce the amount of tax payable on the first $2,000 of eligible pension income. Moreover, if you have a spouse or common law partner, you may be able to split your pension income to lower your overall tax liability. To be eligible for pension income splitting, you must meet the criteria outlined by the Canada Revenue Agency, CRA. There are several tax deductions and credits available to Canadian retirees, which can help reduce your overall tax burden. Some of the notable deductions and credits include the age amount, a tax credit available to those aged 65 or older by the end of the tax year, subject to income thresholds. Pension income amount, a non-refundable tax credit that can be claimed on the first $2,000 of eligible pension income. Medical expenses. Eligible medical expenses that exceed a certain threshold can be claimed as a tax credit. Disability tax credit, available to individuals with a severe and prolonged physical or mental impairment, subject to meeting the eligibility criteria. In conclusion, understanding the taxation of Canadian pension income is essential for retirees to make informed decisions and plan for a secure and comfortable retirement. With a solid grasp of the different pension income sources and the various tax deductions and credits available, you can effectively manage your tax liability and maximize your retirement income. Consider consulting a tax professional to ensure you are taking full advantage of the tax-saving opportunities applicable to your situation.